Hello traders. So today we are going to discuss about gold. The gold sell off was massive on January 30th, right? And lots of position got liquidated, right? Trillion billion dollars got liquidated. And what is the main reason? Everyone is saying because of new Fed chairperson gonna be there. No, the real reason of this is the margin rate increase on the exchange. So whenever the volatility is high, they increase the margin rate right over there. So who will survive in such a case? What happens when the margin rate increases? So if they increase 8% gold, so having a one future contract of gold in your account, you should maintain a leverage of $30,000, right? So think about it. Think about the retail trader, 30,000, 30K, right? To have one position of gold open, right? So to maintain one position, you need 30K leverage, right? So think about it. And they did it on Friday. So what gonna happen is when they does this on Friday, how many position got liquidated? So they have only one solution: either liquidate the position or pour money into it, right? So on the same day, they cannot pour more money into it because the future or any broker, it requires 3 to 4 day business days for the settlement, and the debit card maximum amount you can put is 5K, right? So this is the real reason of crash I can think of, because 30K is supposed to be maintained. This is not retail trader. Even for big buyers, right, whose money putting on the sideline, they will not enter until this market opens again, right? They wanted to see which side the market is going, and when the money will be poured in market again, either Monday, Tuesday, or Wednesday, right? So think about it. Whoever has started their transaction on Saturday or Friday, their money will be poured into the account Wednesday or Thursday, right? So this is what I can think of, like, because once you does that, this is how the things started to work, right? So let's do a technical analysis now. This is all still I can think of. The real reason of crash is the margin requirement, right, which has to be maintained and can only be maintained by big players in the market, right? Any retail traders cannot maintain this kind of margin rate margins, like in on any metals. All right, so let's go back to our technical analysis. Let's see where the gold is heading today. Today is Sunday. The market will be open right at same like 6 p.m. Um, on February 1st, and it's the start of new month. That's also there, right? So let me do one thing. Let me take this thing right over here. All right, and let me put it right over here. Okay, all right. So what happened at the close? Let's look at close. So if you look at close, right, we started to see this is aftermarket. So the selling was keep on going. We started to see some volume kicking in right over here when the market made new lower low, which is 4700, right? It takes the liquidity, it grabs the liquidity of this particular level, which is 4700, and they started to went up, but unable to break this 5000 level, right? So that is where, because if you see, market tried to break this level couple of time and failed. So I can only predicted that only bullishness can be maintained once market able to grab this particular area. Market comes here, consolidate here, break this level, and started to survive right over here, right in the evening. Okay, then only I can think of the next move, which will be again this resistance, then this will be this resistance, right? And this can only possible when lot of money get poured into market. So according to my analysis, what I can think of, the market will be sideways little bit, right? However, the volatility will still be high in the market because of less leverage. People does not have money, they will start to take, they will freak out, they will try to reduce their position. So when they try to reduce their position, it means the market will start it to fall little bit more, right? And then institutional entry can only be done when they have money sitting right over on the table. So what we can see is 4680 is the level where institutional money is sitting, so market can come back to here. It did not tap this level. If you see here, there was little bit gap left, and it was just covering this particular area, right? So there was some institutional buy occurred right at this point, right? These were the institutional buyers, right? And that is where the new institution entry occurred. So new institution entry can occur only at this point. Until then, I'm still suspecting whether whoever again buy at this level, right? Because this is not a again retail trader buy, this institutional buy. The level is 4680. So 4680. So this is a buy at 4600 level. Okay, here I can say it's a buy. Quick move, buy, quick move, buy, quick move, or maybe try to pour, take this liquidity out as well, because this is previous week low. 4622 is the level which is previous week low. And if you see, the gold was surviving in this level, and it made high, and then another high, and then it's big. So this is a complete good order block sitting right at this level. So 4500 to 4600 is the level where we will start to see a nice buy in the market. Okay, if we be able to break this again, right, in the downside, in case, right, so 4300 is the next level on gold. But that is very scary, right? Everyone who has open positions already, they cannot wait until, because they broke it from 56 to um 46. So $1000 fall already done. Now let's see what's gonna happen in the evening, right? Okay, another thing is, let's look at what happened in the end. Let me show you the levels, how the volume kick in the end looks like, right? Uh, so let's look at this. So while closing, right, I see these only two, like this is after hour. In the blue line, it's after hour. So only two volumes was a heavy volume. If you look at, this is a buy of 1.87k, and then another buy is, the sell was 1.31k, and then another buy came as 1.87. So two of them is making little bit, because when this buy came, it buys right before this sell low, right? So 4872 was not able to, like, they try to sell but unable, but failed. They try to sell again, they failed. So lower of this candle was 4880, and then higher of this candle was 4980, right? So if we are not able to break, so at open, if we are not able to break this level 4879, 48 79, because this price is showing this thing, not the aftermarket, right? So this price is showing before the market close, and this is a post market, right, between 4 to 5 for the futures, right? So this price is telling that the buyers started to enter, right? And the stop loss will be your 4800 in case if you are on a buy side. Okay, otherwise we gonna see, this is a kind of bear flag, right? Because it is going like this, right? So it's kind of making a bear flag, but let's see what's gonna happen. All right. So this is what was the analysis on gold. In case if you have any open position, all I can suggest is just, wait on the sideline, wait for the market to stabilize, let it be little was volatile. In long term, is still, like, if I see one day, is still in long term, I can still see we gonna see some good. It is still high, right? The gold is still sitting uh, more higher right now, right, in long term. Okay, so if one of the trend line is also coming for the support, which will support it right around this area, this 4600. So 4600 is the key level in gold right now. All right. All right, guys. So 4600 to this area, 4400, 46 to 4400 is the key level. And if you started to see, this was a big selling volume, then the selling volume is reduces. So I'm thinking on Sunday we will see a good buy right at open, and then we will start to see fall in the Monday. All right, guys, because they want to break all the short positions which has open trade right over here. All right. All right, guys. So this is what the analysis on gold. Let's see what's gonna happen, and as usual, all the very best for your trades.